Mr. Ashok Atluri, the CMD from Zen Technologies, joining us on the show. Ashok, hi. Good to have you on board. Of late, we have been hearing about a lot of order wins that have been coming your way. Talk to me about what the order book is right now, what's the potential for rest of the year, and when does the execution start trickling in?
So we have about 1,400 plus crores worth of orders now, and out of that, about 225 to about 250 or so are AMC related, and the rest of the orders are pertaining to similar training equipment and simulators and counter drone solutions. And we expect the execution to start from next quarter onwards in a big way, and they have to be executed all within the next 18 months. So that's the situation.
Okay, so that's the take coming in. But earlier you had also guided about a revenue profile of 400 crores in FY24 itself. Now, given the fact you're talking about a very strong order book and the execution, are you likely to do better than that?
So yeah, we expect to be in the range of about 500 crores at least. And the next year, of course, is going to be a bumper year, given the fact that the other orders will get executed. Whatever is not executed during this year will get executed in the next year. Yeah.
500 crores this year. Does that mean it is going to be 1,000, 1,500 crores next year?
Yeah, I mean, so the whatever are the pending orders will definitely execute it. At least 700, 800 crores is easily can be seen with the current order book position. Yeah, but you're right that if the orders pile up more, which we expect to have, the execution next year should be much higher.
Okay, so that was about the execution that you're seeing. But what about the margin profile? Because of course, the prices have been quite volatile. There's increased competition with a lot of private players coming as well with the drone as well as anti-drone technologies. What happens to your margins as well?
So, I think the margins, we quote quite aggressively, and we try to be in the margin ratio of EBITDA of about 35% and PAT of around 25%. And because we are a IP-based company, and there's a lot of IP, just not the bill of material that matters, but the research that we have done over the past 30 years. So the margins are they continue to be what we have it in the past, and we see that the competition in India is not willing to invest in the R&D that is required to qualify as IDDM, which is basically indigenously designed, developed, and manufactured. In which case, IP will belong to the Indian company, and there is a proof that Indian company has developed it. At this, when there is a tender which mentions the category Buy Indian IDDM, they are digging deep into each and every person who's claiming that to be, because it's a very sacred category. Fakers and pretenders are eliminated in this. So that is helping genuine companies like Zen Technologies to win the bid. In fact, in most of the tenders that we have participated, a resultant vendor situation is happening where, the single vendor situation is happening, and government is very positive. If it is an Indian IP owned company, they are going ahead and awarding contracts, whereas earlier it was difficult, but now they are awarding, even single vendor situation in cases where the IP is owned by Indian companies.
So Kenny, I was just looking at your net sales number, over 200 crore in FY23. So, are the orders in your space so bunched up that between now and the next year, in a matter of 2 years, the sales revenue clock can go up many times?
So, actually what has happened is there are a lot of changes that have happened. One thing is the regulatory tailwinds that have changed significantly, in the sense 21, they published a framework by the Ministry of Defense saying simulator framework will ensure that move to simulators will happen in a rapid manner. That will no longer be optional, but it will be mandated. And then there were requirement of the training becoming very, very important, especially given, situations like Ukraine, which has the world's most advanced equipment, Leopard tanks, Abrams tanks, everything it has, but it's still not able to really, stand up to Russia. And somebody said, Ukraine has equipment that can almost win a third world war, but still they are not able to fight adequately against Second World War equipment. The reason they are saying is they're not adequately trained. Given all this, there is actually a huge and the perception of with our neighbor, the issues that we have with our neighbor, training has become a very important part, and this is really taken up in a very, very big way. So that is one change that has happened, regulatory and other environment push. And of course, drone is a new threat that has emerged after Armenia-Azerbaijan war and even in Ukraine-Russia war. So the counter-drone solutions have become very, very important. I mean, we say the two important factors, if you don't have, that is lack of preparedness or lack of protection against drones, you are ensured defeat in any war. So we are fortunately in a sweet spot where both are with us, both the things are our core strengths. So the order book is exploding because of the environment, the way it has changed. Yes, it is really, really going to be very big change in that regard.
Clearly, seven time change is what we are talking about broadly between 2 years at your top line. And I love the choice of your word. The order book is exploding. So how much more explosions do you see in the next 2-3 years? This new trajectory, are you talking about your geometric growth as far as your top line goes? From 200 to 1500 and then...
Even if it is linear at this pace, we would be very happy. Not geometric, but even if it is linear, it 7 times into it keeps adds another 1400 crores also, it is good enough, not into 7. But the reality is that these are new threats and new realizations that have come. The counter drone solutions is a new threat that has emerged, and people are really want to protect themselves against it. And the second is the simulator. So we do expect the growth to be there, significant growth to be there, but definitely I would not say whether it's geometric or otherwise, but from the 1400 crore, we expect the order book position to actually improve quite a lot by the year end.
Just before I let you go, Ashok, large part of your growth is coming in from exports itself, and I'm guessing it's the global military that you're tying up with?
No, so it's basically all the exports that we do are under permission from the government of India, and for friendly countries only we do it. And so this is basically, I think, the initiative that the government has launched of target of $5 billion. We are getting tremendous support from the Indian government in this regard, and we expect that even the exports is a significant focus area for government. Fortunately, even for Zen Technologies, and government is promoting companies that have the IP based to themselves rather than just assembling something or importing something and reselling. So that's a big plus for us, and we expect exports to grow to almost 50% in another 3 years' time. They will contribute 50% of our revenues.
Wow. Okay, so one last word I wanted to have. You had indicated margins of 35%, but we all know that this is a hyper-competitive industry. And in India alone, there are so many players. If we talk about globally, then obviously much higher. And still you are able to get 35% kind of margin. There must be technology advantage or some kind of a moat which you are working with. Can you talk to us? What is the strength? How come you are having such good margins?
So, I would say that one thing is that technology is completely owned by us. We don't import anything. So, our cost of manufacturing itself is very, very competitive. When you start importing, for example, a radar or something, radar for a counter-drone system, your cost goes through the roof. And because we are able to do all the R&D, whether it is simulators or counter-drone system, our cost of production itself is very low. So because of that, we are able, and because again, remember that we have done 30 years of research. We have IP, we have 130 global patents that we have filed in India and abroad that are protecting our IP. If somebody wants to create, they have to create something else. So most of the people, we feel that, the prices will be high if somebody were to import and compete with us. Or even the foreign competitors, their prices are pretty high. It's not that we have won, even the first bid that we won was against huge competition, and we were L1 in that. In 2021, the counter drone system we won, even that we had reasonable margins. So I think it is more to do with the IP or the R&D in-house done. Have the product been completely designed and in-house? If you do that, then your margins will be very high compared to, because always you want to give to your customer at the best possible price. So when we map up the competition, we feel that we are giving at the best price, and the margins that we have are sustainable because IP belongs to Zen Technologies in this case.
Okay, thanks Ashok for joining us and talking to us about the growth outlook, which looks very, very strong. So talking about almost 1500 crore worth of revenue, and then after that as well.
Double on top of that.